Hello, traders. I've got a stock that looks great right now, and I'll explain how I found it and why I like it. Subscribe to my channel now and turn on your notifications so that you don't miss any of these daily trades. You'll help me build my channel, and I'll help you build your account. Let's get started. We are a little more than 2 hours into trading. It is Wednesday, March 10th. Hello, traders. Let's take a look at yesterday's pick. You know that I've been focusing on day trading. I feel market conditions are still very unstable. We've got the average true range expanding almost 3 times the value that it was just a few weeks ago. That means we've got a lot of market volatility. Here's the stock that I showed you yesterday. This is BOX. You can see 2 hours into trading yesterday, this is about where we were, right around the $20.50 level. Stock finishes the day almost $1 higher. Very nice trade. Look at this relative strength. Beautiful. That's why I liked it. I also liked it on a daily basis, and you can see that the stock broke through this massive horizontal resistance level at that $20.50 level, had a nice head of steam. I'm going to turn off my bullish explosion alerts. You can see the GME, per normal, has been going crazy. And I'm going to put up my scanner searches, and I'm going to take a look at heavy buying today. First of all, let's take a look at the market. Now, I've got a lot of people that are hyperventilating. Oh, 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 oh my God, oh my God, look, we have bounce here, rally, my tech stocks. I don't know if we'll ever be able to buy some of these tech stocks at this price level again. Just almost panicking that you're going to miss something, that fear of missing out. Well, I have a market adage. Hopefully, you'll be able to take a deep breath and think about this. The second mouse gets the cheese. Well, we all know what happens to the first mouse. You don't need to rush in and panic buy right now. Stock valuations are really, really high. Look at this volatility that we're seeing in the SPY. These are some big daily ranges, lots of red candles, and now we're starting to see them consecutively. That suggests organized selling. But the stimulus bill, yes, the stimulus bill has been out there for 2 months. We've known the Democrats want to pass a $1.9 trillion stimulus bill. They control Congress, they control the White House. Of course, they're going to get it done. So that's priced into the market as far as I'm concerned. Now, the bill is probably going to get signed today, or it's going to be passed in the House today. It'll probably be signed by the weekend by President Biden. That means the checks could be going out within the next 10 days. That's excellent. That's good news. I don't think you're going to see a lot of selling pressure for the next week or so. Shorts are going to be passive with that type of news pending, and I think profit taking will also be minimal. Could we see some profit taking after that? Yes, I think that's very possible. So let's take a look at the QQQ. You can see nice downward sloping trend line here. You can see how tech stocks opened much higher today, and they've been pulling back the entire day. So there's nothing in here that tells me we've got to be in there right here, right now. This could be a bearish flag formation. We don't know yet. Just a simple bounce off the 100-day moving average. Now you've got your upward sloping trend line right here. And if it's breached to the downside, there's your flagpole, there's your little rally, boom, next leg lower. So I would not be in there rushing to buy tech stocks. The point that I'm making is I typically like to highlight some swing trades for everyone. Market conditions are very choppy, they're very uncertain. I am not going to be highlighting swing trades. Almost everyone likes to trade from the long side. This is not a time to be out there taking long positions, in my opinion. Wait for the dust to settle a little bit. So deep breath. We're going to have clarity. The volatility is going to settle down. We'll see how the market reacts to the stimulus bill. We'll take a look at TLT very quickly. And you can see that bonds did have a nice gap higher yesterday. That got everyone super excited. But then here they are again today. reversing those gains. Very stubborn. When we had this big capitulation low about 2 weeks ago, and I saw this nice long green candle here, I thought, oh, that's a really nice firm low. But then we saw selling pressure in the bonds right away. And right now we are auctioning a lot of bonds. So you need to watch those bond auctions. They've not been going that well. You can see that there is still downward pressure on bonds. That means that there's upward pressure on interest rates. Today, we got a big rally right out of the opening gate on a CPI number. The CPI came out, the S&P futures were unchanged before the open, and then all of a sudden they spiked about 20 points. And we'll go into that chart of the SPY right on the open so you can see the price action. And yes, the market tried to take out this prior day's high right here, and it did so. Had some long tails above body, and then once we pulled back in, then we had this nice little sell-off here. I was able to make 10 S&P points on that drop. What do I think the market is going to do now? That is critically important to day trading. I see a lot of mixed candles in here, and they're long candles, long red, green. When they are mixed like this, it tells me that the market is not going to go anywhere fast. We're probably going to stay within this trading range. I think that the close from yesterday will hold. The high from today probably going to hold. So I would look for just choppy trading and a pause today after we had a very busy day yesterday. I want to talk a little bit about trading opening gaps higher. You can see we had this big opening gap higher yesterday, and then the market really rallied during the first hour and a half of trading. And that was most of the fireworks for the entire day. When I day trade, I don't chase this at all. I am perfectly fine letting this go. Why? Because I don't want to be caught in a gap reversal. And oftentimes you'll see a market that gaps higher and that it instantly gives those gains back. Everything looks good for about the first half an hour, and then whoosh, the rug gets pulled out from under you. All of these stocks that are bid up on the open, it's like they don't even have a floor. You hit an air pocket, and the next thing you know, you're scrambling to try and hit bids to get out of your long positions, and you lose money. I don't want to subject myself to that type of price movement, so I'm perfectly willing to miss this move. When things settle down, get a nice little pullback. This was a nice entry point. Then we had a nice little drop here. We had a compression throughout most of the day, and then we took out the low from that compression. We had a bearish 1OP move. Yes, that was a nice short into the last hour of trading. That's how I prefer to handle my day trades. I am watching this 1OP indicator today. It has been negative the entire day, so I suspect that at some point we are going to test the downside. So as I started to look, and this was where I started to look for stocks, when I get a market pullback like this, I am heading right to my relative strength 30 search. I want to see the stocks that are grinding, grinding, grinding higher when I have a market drop like this, because it tells me that buyers are lined up. And so as I started to go through the search, I'll put up relative strength 30 right now, and you'll see these are some of the stocks that are coming up. GME, of course, is in there. Yes, Boeing looks great. Look, it's through this horizontal resistance level, and it's been strong relative to the market all day, and it's challenging this high right here. Let's put up the crosshair tool. We'll use closing prices and opening prices, and you can see we're through. We're almost through these tails right up here as well. So yes, Boeing looks great. That is a stock that you can day trade today, but it's fairly choppy. And it plays into the stimulus bill being signed because the airlines are going to get a lot of help. I've got another stimulus play and another stock that was coming up, and I am still long this. Walmart. Now, this is not my typical play here. There's nothing technically that tells me that I need to be in Walmart. Not on a daily chart anyway. And if I go to the weekly chart, there's nothing that fantastic here either. But the stock has had great relative strength today, and it kind of makes sense. If you think about it, middle income and lower income people are going to be getting a $1,400 stimulus check. Where are they most likely to spend that money? My guess is Walmart. And I think that asset managers, at least for the next few days, are going to be out there buying Walmart. I love the relative strength. So let's put up our relative strength indicator and you can see market down, 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 Walmart up, up, up. I like it. This is the type of stock that I'm going to be day trading. So Walmart is your day trading long of the day. There's another stock that I think fits into this well, Costco. You can see market down, costs go up. Costco's a little bit choppier. You can see this long red candle in here. So it's not off to the races. You have to try and buy these little dips when you can. I think that Costco is also going to start grinding higher. But you can see here, the stock has had some heavy selling pressure, so I would not be swinging this trade. I would not be holding this position overnight. It's simply setting up really, really well for a day trade. You can see how we've got a little bit of a breakout through horizontal resistance on the S&P 500 right now. That's a good sign. So it'd be a good time to start looking at some of these stocks with relative strength. That's how we day trade. That's what I've got for you. Be careful with your swing trades. There's some great tech stocks that are beaten down right now, but I think that if you wait for another few days, you'll be able to watch the dust settle after the stimulus bill. Maybe tech stocks continue to go lower. The TLT is not rallying like mad. Bonds are not rallying like mad. That means that there is upward pressure on interest rates. As long as there's upward pressure on interest rates, tech stocks are going to struggle to gain a bid. This is when you want to watch your relative strength and look for those stocks that are actually holding yesterday's gains very, very well, even as the market pulls back. If you're looking to get into tech, that's how you would play it. Distance yourself from the action, sell way out of the money. Bullish put spreads, option implied volatility should be relatively high. Sell them below technical support and let time decay work its magic. I'm still not quite at that juncture yet, but with every day that the QQQ is able to hold that 100-day moving average, I get a little bit closer and closer to considering selling out of the money bullish put spreads on tech stocks. So that's how I would approach it. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.